Hello, contrarian capitalists. Hope you're doing well. Welcome to the midweek macro. It is Wednesday, the 14th of January. As per usual, I'll just give this video a bit of a slower start because sometimes Substack does cut out the first minute or so. What I'll do is I'll go through a couple of the housekeeping bits and pieces first before, of course, we go in and we'll have a look at the equities markets. We'll have a look at commodities as well. A couple of big things happening around the world to keep an eye on. Before we do that, just first of all to say that the channel has gone a little bit parabolic this week. So I'd like to thank each and every single one of you, new subscribers, new paid subscribers, anyone that wasn't familiar with the Contrarian Catalyst before this week. It seems as though one of my posts, the commodity shortage nobody is priced for, which I sent out on Monday, that seems to have been retweeted a lot or restacked a lot, and a lot of traction's come from that post. I should add that there is also a special offer as well, valid until Saturday the 17th of January, and that is you get 50% off annual subscriptions for life. So you will have 50% off for life on annual subscriptions. That offer is valid until Saturday, the 17th of January, but that discount is applicable for as long as you want to remain a contrarian capitalist. There will be a link to that in the post that comes with this video, or you can click on any post or podcast from the 12th to the 16th of January, and that special offer button will be in there. Things have even got so wild that I'm in the top 6 at the moment of the finance substacks. So I'm honoured and I'm humbled to even be in that position and to even say such words on a live Substack. So I just want to thank each and every single one of you. And again, if you're yet to become even a free subscriber, please do so. But do take advantage of that special offer for annual subscriptions. Again, valid until Saturday, the 17th of January. And a big warm welcome, of course, to all new founding members, all new paid subscribers, and of course, all free subscribers as well. Right, so let's have a look at the markets. I should point out quite clearly that, of course, today it is Wednesday, the 14th of January. The Supreme Court decision on Trump's tariffs is expected to be a bit later on today. I've got no idea what that decision is going to be. I've got no idea how the markets are going to react to whatever that decision is. So that's the only caveat of doing this video this morning, is that that Supreme Court decision is due today, a bit later on today. Don't really know what's going to happen. So let's see what happens. I will also point out, and I'm happy to admit mistakes where possible, that on the commodity wrap and the market wrap, there is a new traffic light system. So there is a short-term idea and a long-term idea. Now, I'll hold my hands up. I have been a bit too cautious on the short-term aspects for commodities. And the reason for that is I remember a couple of weeks ago saying with silver that there should be a bit of caution because of CME group movements and everyone being very, very bullish on silver. Therefore, the contrarian in me has to take a step back and go, I'm not happy with this, hence my caution. 2 weeks later, I can hold my hands up and say it looks like I was wrong on that. But I'll go back to that caveat of that Supreme Court decision on Trump's tariffs. That will have an impact one way or another on the equities markets. That, depending on what that decision is, that could then have a significant impact on the commodities markets. Not saying long term, certainly in the short term. In short, there's going to be a lot more volatility in the days and weeks ahead. But yes, that's why I always say with any traffic light system or whenever I'm talking about commodities or the equities, I can only give you my ideas. They're what I think. So full disclaimer, please don't act and always speak to your professional advisor first before, taking whatever actions you need to in terms of investments. Right, let's have a quick look around the markets. We'll start with the equities. Again, it is about 10:15 Eastern time, Wednesday the 14th of January. So at the time of doing this, we see the S&P 500 at 6,930. slightly down on the week. We see the Nasdaq at 25,510, slightly down on the week. We see the Dow Jones at 49,113, again down on the week. We see the VIX index, so the S&P volatility, that's what that measures. That is up on the week. That's actually up at 23% so far on the week. That could get wild, I think, a bit later on. Watch this space. But it's only sitting at 17.92. So that basically means that volatility is at its normal levels. So anywhere between 15 and 25 is normal expected volatility. So it's sat just under 18. So everything's normal as far as the VIX index is concerned. The dollar index, the DXY, that is sat at 99.01. It's actually risen up the last 2 weeks, but again, ever so slightly down on the week thus far. And again, I'll point this out, that the Supreme Court decision is due today. With whatever that decision is going to be, that's going to send, in my opinion, it's going to send the markets either wildly up or wildly down. But I'm not sure what one that is yet. Heading over to commodities, we have gold at 4,621. WTI, so West Texas Intermediate, sits at 61.58. So again, I said a couple of weeks ago that a bottom might have been in. I'm still Q1 bearish on oil, but again, that's looking a bit foolish now. But that is as it is. I do think there are some shenanigans to play out in the first half of this year, but that's personal opinion. Heading over to silver, of course, silver is flying. It was around about $92 overnight. I look at TradingView, by the way, for people who are new to these videos. I look at TradingView for my numbers. I've got silver here at $91.45. I did see a post from Bald Guy Money on X this morning. It says that silver's actually up 200% in the last 12 months or so, which, hey, if you're in any way exposed to physical silver, or indeed the silver miners, then you've probably had a very good 12 months, to say the least. If we have a look at platinum, let me just bring that chart up. Platinum sits at $2,390. So again, that's up on the week. Palladium sat at $1,846 at the time of recording. And then copper's the other good story. Again, I'm still long-term neutral on copper. I'm going to re-go over all my stances. Of course, that's part of doing this. And the reason for that is Chinese demand seems to be quelling. And also, I should say, talking of numbers, copper here, we look at per pound USD on the contrarian capitalist. It is sat at $6.09 per pound USD at the time of recording. So yeah, it seems to be marching onwards and upwards. But I will point out, and Chris Steadley from Live Score Commodity Corner, he does, we join up twice a month. We do a mid-month macro in the middle of the month every month, and we also do an end of month macro again at the end of each month. He will be recording with myself tomorrow on the 15th, so that by then we're going to have that Supreme Court decision, and of course he will speak about copper as well. It's been on a fantastic run. He thinks it's possible that copper is showing signs of a double top, and again he looks at per pound USD as well, so that'll be something to keep an eye out for. I referenced the article that I'd done at the start of the week that seems to have gone, it's been very well received, and that was called "The Commodity Shortage Nobody is Priced For." And the purpose of writing that was just to show that it's not just, the metals that we cover normally, gold, silver, platinum, palladium. We could hammer home about that all day long. The purpose of that article was to show that there are actually supply deficits across a whole range of other commodities as well. This is why the commodity space is likely going to be a very, very profitable space moving forward. If you think these numbers are good, I highly anticipate these numbers are going to get much higher moving forward as well. I'll put a link to this article in the post as well. You can head over to contrariancapitalist.substack.com and find it. Again, it is called "The Commodity Shortage Nobody is Priced For." But in effect, we looked at nickel, we looked at lithium, we looked at cobalt, of course, we looked at silver, because I think that's the clearest supply deficit out there, or certainly the one that you see people talk about the most. We also looked at copper, which is one reason I want to relook at my opinion moving forwards on that. We did look at palladium. We did look at rhodium. We also looked at aluminium as well. And now I mentioned all of those commodities because all of them are in clear deficit. They are all in clear deficit, and the projections are moving forward. Now, their projections up to 2030, even projections up to 2040 in some of those commodities. The point is that those deficits are only going to get worse. So if we're thinking about commodities, we're thinking about what the long-term picture is, we're thinking about what's going to happen moving forwards. Again, I highly urge you go and read those articles. There's a lot of graphics in there as well, highlighting, so it's not all just numbers based. There are a lot of things to look at. But it's not just silver that has an issue. It's not just necessarily copper that might have an issue, or things like palladium. There are a lot of markets out there, a lot of commodity markets out there, I should say, that do have a lot of structural issues at the moment. And I know, as you are going to be aware watching this video, you do not just click your finger and the mine comes online overnight. These things take time. And if, of course, you underinvest in something for a long time, and then demand goes up, or there's issues with supply, that's going to affect the price as well. You'll notice I left out two commodities there. I didn't look at gold in this article, to be perfectly honest with you, because I just didn't. But commodity number one that's different is platinum. Platinum is projected to have a 20,000 troy ounce surplus in 2026. This comes from the World Platinum Investment Council. So it's like the official body of platinum. So there's a prospective surplus in platinum in 2026. It's incredibly tight. 20,000 troy ounces is pretty much nothing. So all it takes is, again, over demand of something, or more demand that's projected, or if there's any issue with supply. Bear in mind, a lot of the world's platinum comes from South Africa, not exactly the most politically stable country out there. So any issue with supply could knock that number straight into a deficit. But at the time of doing the post, platinum is projected to be in a very small surplus for 2026. That being said, its deficit between 2023 and 2025 was significant, to say the least. Again, the chart's in that post. And then the other commodity that was covered, that is, a lot of people are undecided on it at the moment, that's oil. Now, I said earlier on in the video, my outlook on oil in the short term to medium term, so first part of 2026, I'm still bearish on it. I think there's some other things happening. I know there's a lot of challenges in Venezuela. I know there's a lot of things flaring up in Iran. We'll probably talk about Greenland in a second as well. So oil has this narrative that there's a glut and so forth. I've long said that I disagree with that. So I know like people like Adam Rosenswag and getting Rob from the Crude Chronicles is going to be on the podcast in the next couple of weeks as well. So we'll be talking about that too. I still believe that the future for oil, very long term, triple digits, $200-300, where it matches silver, because I think silver is going to go to the same level. So I don't think that's going to be an issue personally, long term. Short term, I still think there's a lot of shenanigans to play out in the first part of this year. And again, I could be completely wrong. All I do is put my thoughts and my opinions on the traffic light system, which is in the commodity wrap every Friday. And again, please don't look at that and take that as investment advice. Always do your own homework. But what I would say is, if you're not sure about oil itself, or you're thinking about, how do I trade it, or things like that, you can always look at the stocks. I've done a post a couple of weeks ago with 11 stocks that are on the watch list. And now, to be honest with you, I've got no spare capital to put into oil stocks right now. I still prefer to go into the silver mining stocks and gold mining stocks, because I think the potential there is greater than oil stocks. But I do have 11 companies on the watch list as well. And again, things that we can watch out for moving forwards. I don't think oil although there might be shenanigans in Q1, Q2 2026, there might not be, but I think there will be. The future is very bright for oil. Oil is not going to go away anytime soon. So that was the other commodity that was covered on the shortages post that I done on Monday. So again, I highly recommend you go and check that out as well. Also, last week, just very briefly, I should point out, I done a post last week to get feedback from everyone about what they wanted to see more of on the Contrarian Capitalist. It was 5 questions, took about a minute of your time, and I just want to say a big thank you to everyone that participated in that, purely because it has then given myself excellent feedback. So what we've been able to do is we've been able to look at that, and we've been able to decide that moving forwards, the format is going to remain the same. So there will be a commodity wrap on Friday. There will be an equities market wrap and geopolitics overview on Sunday mornings. That always comes out Sunday mornings Eastern time. The podcast will remain the podcast. They will still go out to paid subscribers first, and then they will go out to free subscribers at a later date. The midweek macro videos like this one here, people like them, so they will remain. The big difference that will be made is that more people requested that there is more writing about commodities and stock potential, basically. So that's what's going to happen moving forward. This week there's a lot of podcasts. Next week there's a lot of podcasts as well. So I just want to put that into perspective. There's a lot in the calendar podcast wise for the next couple of weeks, but I have heard what you said. I appreciate your feedback, and yes, I'm here to deliver what drives the best value for you. And that was, Rob, please do provide some more contrarian takes on some stocks and other ideas that are in your head, and please put that into writing format. Therefore, I have listened, and I will do that moving forwards. Let's motor on to the news. You'll see, as usual, again, for those that are new to the midweek macro, normally I put a bunch of articles and news links below the video at the end of the post. So there's a few things this week. A couple of them are actually old articles that I forgot that I'd bookmarked, but they are commodity and energy related, so they're well worth looking at. A couple of things. There's an excellent piece on LinkedIn, and it's called 10 Things About Venezuela, and it's called On Oil, Geopolitics and Drugs. I've put a link into that. Highly recommend you go and check that out over on LinkedIn. Secondly was the fact that the EU is watering down plans to end new petrol and diesel car sales by 2035. This was a post on our wonderful friends at the BBC just before Christmas of 2025. It would also explain why platinum and palladium, in my opinion, again, I'm very bullish in the long run, because that EV narrative is broken down. So if the EV narrative is broken down and more people are going back to regular cars or hybrids and so forth, or they're going back to second-hand car shops, then the level of recycling in platinum and palladium is going to decrease, and the amount of people buying cars might increase. But if they're buying older cars, they're going to have catalytic converters. Catalytic converters have platinum or palladium. Voila. So there's the very simple bull case for those two metals moving forwards. There's also about India planning its coal expansion through 2047. Again, this was an article that I bookmarked a little while ago. So, coal is a commodity, and coal is something that we should look at. I'll try and deep dive into that a bit more in the next few weeks as well. And then just seen there, Bob, I'll just answer your question. Rob, why are the royalty companies not rising as metals are skyrocketing? Bob, the simple answer to that is sometimes a lot of the ETFs and some of the mining companies are correlated to the equities. So, for example, because the S&P 500, NASDAQ, Dow Jones are ever so slightly down on the week, that normally means that the GDXJ and SIL, for example, if you see the metals move, if the equities don't move, then those ETFs don't always move at the same time. So hopefully that answers that question. Just bear that in mind, of course. That just because the metal moves, it doesn't mean the ETFs go straight up straight away or straight down straight away, because they're in with the equities performance as well. So thank you for that question, Bob. Going back to India and coal, yeah, coal is something you should look at moving forwards. Again, they have plans for coal expansion through to 2047, which of course is another 20 plus years. So again, coal is one of these things. We need coal. It is underloved. Therefore, that's a contrarian opportunity, in my opinion. Two other articles. One was from the excellent Dr. Nomi Prinz and the Prinsights team. 5 global mining hotspots to watch in 2026. We're just about to talk very briefly about Greenland. But of course, things to watch is there's a lot of geopolitics out there. There's a lot of mining, issues out there, and of course, President Trump's making waves in numerous different ways at the moment. But it's not just him; it's looking at the bigger picture as well. But in short, yes, there's going to be a lot of challenges, I think, within the mining sector in 2026 and beyond. But that's from a supply side. It's not as easy to, again, click your finger and a mine comes online. And again, when you've got most of your platinum from South Africa, or you've got, I think, most cobalt comes from the Democratic Republic of Congo. Again, they're not exactly they don't scream political stability, those countries. You could argue that most countries don't scream political stability at the moment. But point being that when you've got such a high supply concentration, that makes things very difficult in general. So it's something to watch out for. That piece by Dr. Nomi Prinz and the Prinsights team is at the bottom of this post that will come with this video as well. That leaves us on one thing. That is that Trump has insisted, this is a title from BBC News, Trump insists US needs Greenland for security ahead of White House talks. Now, I'm not here to get on my political high horse. What I would suggest people is have a look at a map of the world, and you can see the Americas. So you can see North America, Central America, South America. You can also see Greenland. And you might be surprised at how big Greenland is. If you want to know why Greenland is called Greenland and not Iceland, I believe it's something to do with the Vikings years ago wanted to put people off not going there. So they called it Greenland when in fact it was icy and vice versa. I think I've got that correct. If anyone wants to quote me on that or correct me on that, feel free. But I believe it's something to do with the Vikings years ago, which is why Greenland, although it's called Greenland, is icy and is basically white if you look at it on a map. And it's also why Iceland, although it does have volcanoes and so forth, has more green than white. But anyway, that's my understanding. Waffling on, continuing. Yeah, I'm not here to say whether President Trump is right or wrong. We're all going to have different opinions on that. But if we try and put it into an energy perspective, then what he is looking to do, and I think this is what more sovereign nations are starting to understand, unless you're Europe, is that energy is the economy. You need to have energy. You need to have this commodity security. You need to have these supply chains intact, and you can't be relying on every other single country for everything that you need. Now, the US is a superpower. It has been, the global power, arguably, for the last 120 years. It took over the mantle of the British Empire back when. Now, you could argue all day long, is the US empire coming to an end? We're not here to discuss that. I'm just putting this into the perspective of the commodities. So all we got to do is look at a map. This is why there's a lot of issues with Venezuela. This is why there are also ongoing challenges around the continent of South America. That's why he's sending out, potential threats to here in Mexico, where I am based at the moment. There's a lot of things going on. But if you just take a look at a map and you look at the potential resources that Greenland has, I know it's a part of Denmark. I am aware of that. And I'm not advocating for them to go in there and take it over. I'm not saying that should happen. I'm saying if we're looking at it from a commodities point of view, then it makes sense what is being said. Because are Russia and China and those superpowers in the East, are they likely to come all the way over to Greenland and, start, have a war, have a shootout and do any of those things? The chances are that's unlikely because Greenland is a very long way away from Russia and from China. So therefore, with the Monroe Doctrine or a Donroe Doctrine has been going around on the internet, again, just go and take one look at a map. It would make sense if Greenland were to, again, be incorporated into the USA. Again, for the fifth time, I'm not saying that that should happen. I'm not advocating for it. You can tell by my accent, I am from England. I am from the UK. So I'm not going to get on my political view here. I'm just saying from a very sensible and logical commodity point of view and a geographical point of view, that is why I think there's all these undertones about, even Trump and Vance, I think, have headed over to Greenland for security talks and White House talks, all these sorts of things. So that's where I will leave that. That is a developing story. Iran is a developing story. We will see what happens there. I know that Tom Lawon goes back on the podcast in February. We have a plethora of fantastic guests lined up in the next couple of weeks as well. So I just want to say again, I appreciate all the feedback that every one of you gave me about how to improve the channel. Yes, there will be more writing. I will promise that, because that is what you want. Just bear with me for the next couple of weeks, because the Contrarian Capitalist is very podcast heavy. That was just part of the scheduling. So it's just one of those quirks. So that is absolutely fine. So just bear with me for a couple of weeks. And as I mentioned at the start, it's the Contrarian Capitalist this week. It's been a bit bonkers. Apparently, it's now a Substack bestseller. I think it was in the top 6 this morning. It was in the top 6 this morning in finance as well. So things that I'm very humbled to even to be able to be on this video and say. And I'll just reiterate that this week, up until Saturday, the 17th of January, there is 50% off annual subscriptions for life. So that discount is available until Saturday, the 17th of January. Although if you do take advantage of that discount, you have it for life. I should say the offer is valid until the 17th of January, but that discount remains for you for life for as long as you want to be a Contrarian Capitalist. I thank you in advance for becoming a paid subscriber. You can become a free subscriber as well if you want. That would be an honor. You can also become a founding member. That is a one-off investment. So that's a one-off payment for life. Please do bear with Substack's back office as well. I've had a couple of people reach out of emails to say, hey, I've just become a paid subscriber, but it's not showing on my dashboard. Substack is a bit slow at the moment. Please allow them 24 hours, maybe 48 hours to just rectify things in the back office. So just a word of warning for every new paid subscriber. Just give Substack 24 to 48 hours as well. We'll leave it there. I'll be back tomorrow with Chris Steadley of the Live Squawk Commodity Corner for our mid-month macro. Of course, we will have that Supreme Court decision about Trump's tariffs by then, so we will be able to see roughly how the markets have reacted to that. We're on a knife edge. I don't know what's going to be decided, and I don't know how the markets are going to react. What I would say in the short term is if the news is buoyant, triple digit silver is likely going to be incoming, but I will take time to relook at all my commodity traffic lights for you as well. And again, usual disclaimer on them, just because they're my thoughts doesn't mean you have to act on them. Always speak to an independent financial advisor and so forth. That's a midweek macro for Wednesday, the 14th of January, 2026. A very belated Happy New Year. Thank you to everyone for tuning in. Thank you to everyone for supporting the channel. We're making great waves. It's been a great start to the year. Come across, become a subscriber, take advantage of that special offer. I'll be back tomorrow with the Chris Steadley of Live Squawk Commodity Corner. Take care. Cheers, guys.